This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
It's great to be with you here on a Monday on Business Now. Let's take a look around the country, shall we, at the property markets, especially after those interest rate rise last week. So across the country, there were 1,465 auctions. It was pretty strong. 63.8% of those were sold. Sydney picked up 543 auctions, better than the past few weeks. 63%, give or take, of those were sold. Melbourne, 489 auctions, but it was stronger there with close on 67% of those properties selling. In Brisbane, it had 66 auctions, little weaker, 60%, 60.6% were sold. Adelaide, though, super strong yet again, 84 auctions there and 81% of those were sold. And let's go to Canberra, shall we? There were 66 auctions and of those 71.2% sold. Let's now go to RBA Group's Economist Anne Flaherty, who is with me now. Anne, always good to chat. You did see an immediate impact of the interest rate rises. The sense is if there's 2 or 3 more, that could suddenly dampen the mood of investors and maybe property buyers as well.
Yeah, I think it's going to, especially if we look at where we were a year ago. Signs were that we're going to have a whole series of interest rate cuts. We did have 3, but now we've had the first of those cuts that looks to be reversing, first of those rises, I should say, that looks to be reversing the cuts we saw last year. So this has absolutely been a bit of a blow to buyer confidence. And I think that should we see further interest rate rises over the coming months, it's absolutely going to have a dampening effect on buyer demand. OK, so that is what the markets are predicting right now. That's what most economists are predicting right now. There'll be at least another 1, possibly another 2 rate rises this year. But offsetting that is the government's enormous incentive to first home buyers to get in. So it could almost be a perfect storm that one government measure is almost counteracting or offsetting the Reserve Bank and its attitude to where it wants the price of money to be. That's absolutely been the theme of things the past couple of years, and of course one of the reasons why we have seen elevated inflation. And I think, as you mentioned, even though overall, if we would think about buyer demand being negatively impacted by higher interest rates, the fact that we have this 5% home deposit scheme available to first home buyers within any income threshold absolutely is going to drive higher demand at the lower end of the market. So I think that actually for first home buyers who get in early, there's a lot of opportunity out there. We will probably see investors pull back slightly because of higher interest rates and also because of that increased competition from the first home buyers who can get in on this 5% scheme.
OK, truth be known also, there's a whole lot of mortgage holders, it's been talked about pretty broadly, that are way in front with their mortgages. Because they simply, as interest rates have come down, they've kept their repayments the same as they were, so they've got a lot of equity built up there. Now, same thing as interest rates start to rise, they can just eat into those buffers just that little bit. In many ways, it may not affect the price or rather the consumption or the spending of those consumers terribly much at all.
Well, it's a very good point. And if we think about those people who do have a mortgage, a little under half, or who own a home, I should say, a little under half don't have a mortgage at all. And if we think about people who may be in that retirement phase of life, a higher interest rate can actually increase their income to spend if they just have their money invested. So it's very much impacting the mortgage belt, these higher interest rate rises. It's absolutely not affecting everyone equally. And in some areas, there are people out there who can actually have more money to spend as a result of interest rates going up. So, it's not necessarily bad news depending on who you are.
And Flaherty, always good to chat to you. Many thanks for your time. We appreciate it.